how can you help a buyers help better prepare when they're on 1099 and W-2s? And do you offer bank loan statements? And if you can shed a light on that.
Sure, yeah. Well, for people that are 1099, lenders are going to view that like self-employed. And it's because when you file your taxes that you get to write off stuff that isn't accounted for in the paycheck that is given to you every month. And so if you just follow the rules of self-employment, meaning that you're going to have had that going on for 2 years consecutively, that type of pay, for lenders to be able to consider it. That's the biggest takeaway on the 1099 is that there needs to be consistency of it for 2 years. With the W-2s, that's probably the easiest qualification. Salary versus hourly is easier. You can start a new job on salary and you don't have to have this huge history that you do with the 1099 or even with hourly, because it's salary. It's a guaranteed same paycheck every month. It's when you get into the hourly that it changes a little bit, because we need to average the hours that you've worked over the last 2 years to make sure that those are consistent as well. Doesn't mean the same job, it just means the same pay structure.
So if someone starts a new job, a couple of W-2 would suffice, wouldn't it? Or do you need more than that?
If somebody starts a new job, you mean a couple of pay stubs?
Mm-hmm.
Yeah. If they're on salary and they started a new job, in certain situations, we can even just use an offer letter. They don't even have to have the job started yet, as long as they're currently employed. And we have an offer letter with a start date that is before the first payment is due.
Mm-hmm.
Then a lot of programs will accept that.
Great.
And sorry to cut you off.
No problem.
Regarding the bank statement programs, we do have bank statement programs. The bank statement programs are really designed for people that are self-employed. So these are people that maybe write off a lot on their business tax returns, but they can show a lot more on their bank statements in terms of the income and the revenue that the company is generating. And so that's what these programs are designed for. And you have to keep in mind that they're a little bit more risky, and whenever there's more risk layered into something, that it's going to make the interest rate more expensive. So naturally, lenders are going to pass that on to the buyer or the consumer, and they are going to build that into the rate. So the one thing that I can just encourage everybody who is interested in a bank statement program is just to expect that you're not going to see the lowest rate that you see advertised all over social media, because you're asking for an exception.
So when you talk about bank statements, how much of a bank statements do they need to show? Is it for 1 year, 6 months?
They need to show at a minimum 12 months of bank statements for the business. And depending on the program and the investor, it can be even upwards of 12 months into 24 months and higher. It really just depends on each individual investor, but the minimum would be 12 months.
Perfect. Thank you so much. These are all great information, and I know I'm taking a lot of good notes.